Good morning, everyone, and welcome to this live trading webinar. So let's go through the risk warning, and then we are ready to start it. So this content is for general information only and is not intended to provide any trading or investment advice or personal recommendation, and any information related to past performance of an investment does not necessarily guarantee future performance. Guys, remember to engage with the fundamental analysis. You can find the podcast on our website. You click here where it's the analytics. You just visit admiralmarkets.com, analytics, weekly trading podcast, and you can choose the way you want to listen to it. And of course, if you haven't downloaded the mobile application, please make sure you do you download it. Let's see who is with us today here on this Wednesday webinar. Larry said, good morning, Theo. Good morning, Larry. Ruben, how are you doing? Ruben said, good morning. Radov said, good morning, everyone. Good morning, Radov. Roland, how are you, Roland? I hope you're doing well. Maria said, good morning, all. And let's see what the day will unfold for us today. We are excited, actually. Mogil said, good morning, Mr. Theo and everyone. Good morning, Mogil. Ibrahim said, good morning, Theo and everyone. Good morning, Ibrahim. Nicholas said, good morning, everyone. How are you doing, Nicholas? Mr. Carlos, good morning, guys, from Mr. Carlos. And of course, Mr. Nick said, good morning, Theo, and hello to everyone. Vladimir said, good morning. Emmanuel and Folonso said, good morning, both Emmanuel and Folonso. Mladen, how are you doing today? Good morning, Mladen. And for the rest of you guys, good morning, of course. So let's start with the pound against the US dollar. Yesterday, the inside candle around that support, between support and resistance, it forced mainly the buyers to take control, so price move a bit higher. At this point, this downward trend line is very, we consider it as a strong because it has been tested for 3 times, and every time it's been tested, it created a new structure in the market, a new lower low. So either we expected to see the price today move downwards, or we expected to see more push to the upside. Now, it's at these weird occasions where we don't know from which support the price will bounce upward and create a new market structure. Some people, they buy the support from the anticipation of this higher high move, but again, it's not always the case. I mean, some people, they bought support here and they got stopped and out. They bought support here, didn't work. They bought support here, didn't work. Maybe this support will work, but to cover 3 losses and make profit, you need minimum 4 to 1. If you're going down to this path. So a way to trade support for trend reversal is ideally to have 2 or 3 confluences, like positive divergences in the market, like price make lower low and the indicator to make higher low. In this case, the RSI, the indicator, make lower low, so it doesn't confirm anything. And or to have an oversold indicator, which again, it's not the case. The indicator didn't trade it below the 30, the lowest 30, or to have a trend line broken like we have on the gold. But here we don't see this. Okay, I hope that's clear and everyone understand. Y said, good morning, Theo. X-Man, good morning, Theo and everyone. Good morning, guys. Rumen, how are you doing? Emmanuel, are you watching from Ghana? That's awesome. So we have people from all over the world in this webinar, and that's great. Now, the bias for today, I will still keep my mind open for decline because overall we are in a downtrend. And again, as I said, I don't know if this is a support that is going to create market structure. Overall here, market show bearish sentiment. So I will stick with that for the long-term bias. Now, if you're trading intraday and you go to the 5 minutes, 1 minute, 15-minute chart, based on this bullish engulfing, you expect today to see at least some upward swings. So on the lower time frames, I will go with this pattern here, with this price pattern. But on the swing trading, I will definitely go with these lower highs and lower lows of the daily chart. I hope that's clear. Next, it's the euro against the US dollar, bullish engulfing yesterday, again from the support, price broke above this downward trend line. And again, there is the long-term trend line, as you see from here, 1, 2, 3, and 4. Therefore, we do expect to see some decline. If price breaks above this, this is the trend line that marks all the price move, as you see from here to there, to there, and to there. The channel we draw, it was a steep one to go with this flow within the channel. So in this case, a break outside of the trend line will confirm the first worries that this trend may came to the end, and we're going to start looking for longs. Okay, but for now, and why yesterday, remember on the webinar on how to manage losses, actually on the trading psychology webinar, I explain as well the power of anticipation, because again, how can you trade from a level you believe it's a resistance to go short if you don't anticipate, if you can't believe that the price will find some resistance at that point? Like this one here, bullish engulfing at resistance. I have to wait to see a kind of false breakout or a kind of situation here. Yesterday on the 4-hour chart, we talked about this price action here that was 15 points, and it gave 2-1 for traders. They might took that trade here. Okay. Australian dollar against the US dollar, same pattern. Yesterday during the New York session, the US dollar got weakened. New Zealand US dollar, this channel line is invalid. We draw the trend line, and now we see the price broke outside of the trend line. But at this point here, there is a resistance. So for retail trading, at resistance, we avoid to buy unless the price is making higher highs and higher lows, and we try to buy the resistance for the next impulse move. But to buy the resistance on a trading range for any reason, I don't think so. It's a good idea from a technical analysis perspective. Daily chart yesterday on the USD JPY, bearish engulfing at this point here, so it shows some weakness in the market, and it flushed traders in both sides, unfortunately, because traders who saw a breakout, traders who saw the US dollar traded above this resistance and they considered as a valid breakout, they bought stop loss there. Traders who thought that this resistance will hold and they entered the market, they had a stop loss above there, so their stop loss first got hit, and then the price reversed. So when we don't identify market structure in a meaningful way, we're gonna believe that markets always operate in randomness, which actually price action is random within the markets if we go in a very deep analysis, but there are statistical patterns that all the time, every time they appear, they have a high probability outcome that we can take advantage of that. But if we don't operate under the mindset that we are looking for that specific pattern, and we try to trade the way we would have traded that pattern, to trade it in an environment, in a trading environment, we don't understand what the market is doing, there we lose belief, we lose our belief, and we start questioning the patterns. Guys, pay attention to this. When you trade statistical price patterns with high probabilities, and you also try to apply the same method in a market that it doesn't have a structure, it doesn't have a meaning, so we can trade it, then you start with one losing trade, you just question the validity of the pattern. But that's wrong. Why? Because you try to apply something that works for this environment, but for sure it doesn't work in many cases on that environment. So you cannot apply that. Okay, I hope you understand. Rumen said, sorry, I didn't. Guys, that's very important. So let's say market is moving upwards, higher highs. Please pay attention to this one. Okay, everyone. Price makes higher highs and higher lows. So high chances is to buy the dip and keep the trade until a new high is happening, or until this high here. Whatever we want, ideally we want to be buyers. Now, a bullish engulfing at this kind of support, a bullish engulfing, it's a high probability trade to be traded to the upside, right? A bullish engulfing. On the other hand, when we have a downtrend, a bearish engulfing at this point here, it's a high probability trade favored the sell-off of this market. Is that correct? Do you understand it? Bearish engulfing has high probability ratio on winning ratio within a downtrend, and bullish engulfing within an uptrend. If in a downtrend, you see the price moving upwards to make the correction, and you see in a downtrend a bullish engulfing, in a downtrend a bullish engulfing, that's the worst trading setup a trader can take. That's the worst. It's the lowest probability setup. So the high probability setup that can be traded with great reward ratio and great success within an uptrend, to trade it in the wrong market environment, it will experience more negative results than positive. So if you start trade any bullish engulfing you see in a downtrend, then you're going to experience frustration. And guess what? When you will see bullish engulfing in an uptrend, you will start questioning the validity of the bullish engulfing. And if it's a good signal to trade. That's what traders do. And if you are doing it as well, now you understand why you shouldn't be doing it, and trade high probability signals and patterns when they appear at the right market structure and the right environment. Okay. Does it make sense now? Is it more clear? So let's move on to the next one, guys. I mentioned this example because it was very, very relevant. Let's say within an uptrend continuation pattern, we find this market structure. So anyway, let's move on. USD Canadian dollar. We expected the weakness to come. Maybe this bearish engulfing now signals it's gonna signal the beginning of this correction. This market, believe it or not, in a currency pair, it hasn't corrected for the last almost 5 weeks. So we do expect a correction. Now the thing is how to trade it. Maybe we can trade it only on the lower time frames if we don't find a lucrative price action to trade on a higher time frames, like swing trading, and let's say try to sell somehow from here on this 4-hour or 1-hour chart, because that's a very long candle, and try to go at least to 38.2, ideally to 50%, where it matches with the support. Do you see, even if you take this one, okay, just leave it, this one here. Do you guys see that this strong support in the market consists with a 50% fib retracement? That's the trading setups we would like to look at. Here is where, that's where we have to anticipate the price move. All right, keep that in mind. USD CHF. So we were looking for longs, but again, weeklies in a downtrend. We commented yesterday that the market, the price closed above the 10-period moving average, so we look for longs. Again, on the daily chart, we had 2 closes above the support, so indicates that a valid breakout happened on the Swiss USD. But during the New York session, the market disagreed with that and made this bearish engulfing, and it looks like we're going to see some weakness to come. Remember, in 2 days from now, non-farm payrolls, and the market will get some direction afterwards. The Euro JPY price makes higher highs, higher lows gradually. I did expect it to see some more weakness. So if price is going to make a new high here, I will place a sell stop below this low here for the bearish engulfing, and hopefully target this area here. But if it continues push upwards, I'm not going to do anything unless the market breaks above this resistance. Pound JPY. Obvious weakness in the pound. Above and below resistance here. If it's going to be a support now, if it's going to push lower, who knows? I'm not interested in this one, as well as I'm not interested in any of the Australian dollar JPY and New Zealand JPY. They are within a random market environment, and I can't define any clear market structure. Not because I don't want to. Guys, if you want, you can find this market structure and say market makes higher highs, okay? But if you try to understand exactly, hey, what the price, I have a buyer and a seller, who is dominating this market here? In my observation, nobody dominates the market. So that's what I mean by I don't understand and I don't see any market structure here. Let's check some of the commodities. Where is the end gas? DAX, we will come back on the DAX in a while. Gold price still trading higher, which is great for those who are holding positions on the gold. So it's a very bullish here. There is a resistance for intraday traders. There is a resistance found on the daily chart that the market, if it's going to trade it for another 90 pips higher, it's going to find a strong resistance here. WTI, bullish engulfing, looks like this pattern is not valid. The potential head and shoulder, two very bullish candles the last 3 days. Not interested. Silver, still higher highs, higher lows. Very nice trade also on the silver. Copper, bullishness. Some resistance here, strong level of resistance, inside resistance, and this one here, it's a bit difficult market to trade. Bitcoin gained a lot of momentum yesterday. It was almost nearly 26,000 and it closed on the 27,400. So very, very good bullish. Dow Jones bullish, and Nasdaq. Nasdaq is an interesting for swing traders because there is a downward trend line at this point here, and any weakness here, I mean, this price action, it's very, very nice. 30 points, and the market, if it's gonna retrace up to the middle of this bullish candle, it can really give a nice reward to risk. S&P 500, FTSE, bullish, both of them. Platinum opened with a strong gap yesterday and closed bullish, so there is a high chance for the market to continue moving upwards. And gas, why I don't see the end gas here? Just give me 1 second, guys, to find the end gas. With the end gas market, it's very choppy, to be honest. I don't see anything here from the weekly chart, let's say. Here is an upward trend line. Here it's another one. It's like a rising wedge. And gas traded within this decline and upward trend lines, and it doesn't have any meaning at this point here. But considering the bullish engulfing at this support, then we do expect it to see the market moving higher. However, please understand that a strong area of resistance from this bearish engulfing, it's here. And yeah, we'll see what the market will do. Questions? Mohammed said, good morning. Ibrahim said, You are currently in global demand, Theo. Mr. Carlos said, guys, did you trade yesterday for the market opening in the US? Did you also check that the Admirals platform froze on the gap on the Dow Jones? There were many gaps, and that's not due to Admirals or any other brokers, guys. It's due to the market's liquidity. Poncho, hello, guys. Rumen, were you? I thought you said, sorry, I didn't. I thought you were answering on the question I asked, but it was obviously for Carlos. That's okay. Mogiol said that I didn't say to write it down this time, but I hope you wrote it down, Mogiol. Graceland, morning, Theo and all traders. Good morning. And if market closed 1.4 last night and you want to buy at 1.4 today, but the market is still moving between 1.03, yes. Why it is moving if the market is closed, and how you can pinpoint the entry? You can, you can place limit orders. When you are able to place limit orders, you can place the limit orders. Fresh rainy, hello from Slovenia. Oh, is it raining in Slovenia? SY bullish or bearish, depend when it occurred. That's what I remember from your webinar, Theo. Exactly, that's spot on. Darshan, the USD-JPY rally, not a sharp pullback on the news stats yesterday. Yes, thanks for the info, Darshan. Jahan and Gas, please. Yes, we did that. Marcelinos, good day, everyone. Ruben, 3 minutes for the London Open. Let's check the DAX. It's time for the trade. So, daily chart, it's fighting with a resistance here. If you see on the left, there is resistance here, there is resistance there, there is resistance up there. This one, it's an inside resistance. Only one's been, no, 1, 2 candles. That's not an inside resistance, because we want 2 candles on the left, not to protrude above this, but we have this one, so that's make it invalid. And on the right, we are fine. So let's go to the 5 minutes. Let's see. First, I will place a buy stop order. Buy stop order above this. Why set limit? Not set limit. Come on. Buy stop order above this high. And let me bring the other chart so we can see the time. Where is the other chart? Oh. Just to check the time from the TradingView platform. Okay, here we are. Another 45 seconds for the London Open. So to place a sell stop order at this point here, it's a bit of a thing, because there is no any kind of retracement. So without one bullish candle, how can I place a sell stop order? It's a bit of a thing now. 10 seconds for the London Open. I don't have the chance now to place a sell stop order, but I have it now. Okay, sell stop. So buy stop order triggered. And again, let's hope it's going to be a valid breakout and not a false breakout. So 10 points, it's somewhere here in case the market will trade at that high. But if the market is going to close below these lows, I will close the trade. So looks like a bearish engulfing wanted to be print on the charts. Let's see. Everything is Margaret, good morning. How are you doing? Well, I hope you enjoyed the webinar yesterday, and everyone else, of course. I just remember your name because you remember you were there because you asked so many interesting questions on the psychology webinar about how to manage losses. For those who missed the webinar, as usual, please make sure you subscribe and enable your notification buttons on the YouTube channel in order to receive the notification when the team will upload it on the YouTube channel. Usually they upload it a couple of weeks after. So let's see what the price will do. Guys, any questions about anything else you traded or you're looking to trade? Does anyone keep a journal when open and close trades? Not a journal to write down the opening price and closing price, to keep a journal of how do you feel when you open a trade and close a trade. Ruben said yes. Amin asked, how can you please explain why we are taking this trade? So the DAX at the London Open, the indices, they create a strong impulse move either to the upside or to the downside. That's called the London breakout strategy. So I look on the 5-minute to find the swing and place one buy stop order and one sell stop order, of course, above and below the recent swing. And which order is going to be triggered, I cancel the other. And I target 10, most of the times 10 pips. This strategy wins much more times than it loses. So I can afford to trade this way. So it looks like that it's not going to be with us. This trade again this morning. Let's see what's going to happen. Ruben asked, could this strategy work on the Nasdaq 100? I have no idea. I didn't test it. I didn't try it. So what to say? I don't know. Do you trade with stop loss? Of course, I trade with stop loss, but I explained it many times. In this strategy, particular strategy, I don't put the stop loss on the chart because I'm in front of the screen and I act immediately when the price, like now, I will close the trade with a loss because the price tapped into this area of support where I should have the hard stop loss. Okay, so that's how I manage this kind of scalping trades, which is the only scalping trade I do based on the London breakout. Guys, that's the strategy. It calls the London breakout, and other people applied it on the pound US dollar or currency pairs. I prefer to apply it in indices because I tested it and it works that way. Sometimes we lose on the trade, sometimes, most of the times we win, so it works that way. Last question now, and I have to finish the webinar, guys. You didn't take the trade on the higher time frame in consideration with your daily DAX trades at all. HV, great question. However, remember, that's a strategy, and the strategy had both sides. There is a buy stop and a sell stop, and I don't try to guess which one. For swing trading, absolutely, I would have done that, but for this particular strategy, the rules are not like that. And last one from Alonso, do you think TG will drop further from its current level? G, which one? Okay. All right, guys. That's all from me today. I wish to everyone to have a great day ahead. If you are trading, happy trading. And I look forward to see you all tomorrow at the same time. Thank you so much.